Hey everyone, John Henry here, slingshotfutures.com, and welcome to the daily market outlook for futures and Forex, where we take a look at the big six markets. The main goal of the outlook is to create a plan for tomorrow so that we can be as prepared as possible for tomorrow's price action. Now, one big thing to keep in mind, obviously, this is Thanksgiving week, right? A lot of people aren't even going to be trading this week, and the ones that are more considering early in, early out type scenarios. They want to get in, they want to make the money, and they want to leave, and that's kind of the way that we need to approach this as well. So for today and tomorrow, that's really about all we have for this week in terms of trading opportunity. Going into Wednesday, Thursday, Friday, etc., that's when the markets really start basically closing and everybody heads home and, back to the families just to kind of hang out. So just keep that in the back of your head, especially if you're not from the US, because obviously you may not be used to that. We are going into Thanksgiving, and that's generally when the market slows down a lot. Welcome to holiday season, right? So let's start off with the futures first. Take a look at gold. Now, gold overall, relatively range bound. If we zoom way out, we can see that we are just finding a little bit of a wedge, and we're finding a good chunk of resistance out of that initial bounce higher here after that drop. So a lot of times this will happen where you get a big drop in price movement and it'll form a little bounce. That bounce, that peaking area, if the market comes back to that location, it's generally seen as an area of resistance, and that's what we had today. We came back up into that area of resistance, not all the way through. The big push through would be at 1218.9, but we did start getting into the underside of kind of the belly of that area at 17.5, and that was enough. We found a lot of bearish price action right back down again. Now, the overall bearish tone that we're seeing, that is kind of shoving us into a range. We can see the lows were held really well back on the 18th, and again, we're cycling off of the highs of this of the swing that happened on the 17th. Now, that may just form one really big range. Currently, we do have a bear channel working its way down. It's kind of small, all things considered, especially considering that we have the bigger wedge top. That's more likely going to be where a lot of the sellers would like to see some price action movement around the top of that wedge. So we are breaking out higher. We may find a couple more legs to the upside on this until we hit the top of that wedge. Now, the big area of interest, if we can get a push higher, would be a breach of this 1218.9 area, because again, that's kind of the final line in the sand. That's the big trap area. So if you can poke our head above it and then dump right back down to the lows, that would be a very nice sell opportunity on gold to attempt to drive the market back down to the lows. Now, again, depending on when that happens, don't lose sight of rising support, because that is still an area that may get in the way. If we pop our head above it, we could easily come back down, and depending on how long it takes, we may even find a cross where not only do we have rising support, but we also have falling resistance, and it's all coming in to form this little kind of zone of confluence, right? So you got to be careful of those types of areas, but what I would really like to see is a sell above 18.9 to drive the market back down into an area of support. Now, given it's been so long since we've come down to that low, until we break the overall low at 1201.3, it's assumed that 1203.2 is going to be a big area of support. So really, you're looking to play this one side to the other. So that's what we got on the list for gold. Taking a look at crude oil. Crude oil on the 117 contract. If you haven't rolled over, make sure to do so. We opened up this week on Sunday with a gap higher. Now, this weekend gap is still open, right? I can't put any more arrows on that level. 46.32 is the big line in the sand. Today was a very bullish day, and really this bullishness hasn't stopped. We had a pause from the 16th to, the 18th going into the 20th, and now it looks like we're kicking it right back off again. Now, this may just end up being a big measured leg, right? A to B equals C to D, and that could be the location that we're looking for towards the upside. In terms of the smaller objectives, really we just kind of have to pay attention to the fact that the buyers obviously want this, but with this huge open magnet down here, very frequently the market will have a hard time continuing after a move up like this until it closes that off. It closes that gap at 46.32. Now, we are very far away from it. We're about $2 away at the moment. So am I anticipating it going all the way down there, later tonight? Probably not. But at some point this week, maybe even next week, depending on how aggressive we stay here, the buyers are still in control, and we have to be looking for buying opportunities. Now, the hard thing is you don't want to be buying way up here, and that could really be said all day. And you can see the buyers really didn't want to buy up here. Every time it formed a big bull candle, it paused and then pulled back. Big bull move, paused, pulled back. All of the buyers want to buy these pullbacks. They don't want to buy way up here at the highs. They want to buy these little dips. So right now I'm looking for a possible two-legged correction down, aggressive buying in 48.19 to 48.12, but the more substantial buy area would be between 47.99 and 47.88, and then just looking for the market to rip right back up towards the highs. Generally speaking, with this kind of move and what we're seeing right now, we're more likely going to cycle into a range, so we may just ping-pong back and forth inside here. Either way, though, I would really like to see that fake break of the low and then a push right back up towards the highs. And then wrapping up the futures on the S&P 500. S&P, very slow, right? This almost looks like you're looking at a tick chart, right? Very, very low volume in terms of volatility, right? Very low volatility. Now, the overall movement that we're getting is nice and bullish. That definitely is something to keep in mind. And if we zoom out, we can see that this wedge that we've been forming here has been going for a very long time. And that's after that humongous V bottom that we had back on the 9th. So with that big V bottom and the highs continuing to go higher and the lows continuing to be higher than the last, generally speaking, we are in an uptrend. Now, what are we looking to do in an uptrend? Well, we want to buy low and we want to sell high because we want to sell for our targets at areas of resistance near the highs. Now, the way that we're setting up at the moment, we could be forming some, wedge top that still has targets way up at 2,300, but more likely than not, this looks like it kind of petered out a little bit, right? We had a little bit of a possible wedge top. They broke above it, held it as support, and now they're back up towards the highs, and now it looks like they're just kind of running out of steam up here. So we have this bull channel rising higher, but there are a couple concerns for the buy case, just the way that it looks. Now, a couple other things, if we zoom in here to further kind of extend that concern for the buy side all the way up here at least, is simply that twin reversal that we had, right? Big close outside of it, a falter, basically forming a one candle gap, and then immediately right back down again. That is a bearish indication. The buyers who have been buying this entire move up, they're no longer interested in sticking around and waiting. So we're looking for buying opportunities on a pullback. We want to get better prices. In terms of open objectives still up at 2198.75 to 2200 and a quarter, all the way up back to that big round number at 2200. So buyers still have a lot of open ground to cover, and there's plenty of room to become a buyer. But again, we need to be buying on pullbacks. This area that we're in right now, 92 and a quarter, this is a nice area if you're aggressive to be buying in. But the fact that we kind of overshot the highs here a little bit, and now we're coming on the inside, I would much rather see a push down into the lows of the channel, maybe even a little below it, before we start jumping into the buy side. So definitely in an area where you can, kind of consider scaling in if that fits your type of trading. Otherwise, though, looking for a little bit more of a pullback here, maybe to the bottom of the channel, and maybe we just go range bound until we tap it and then look for a tap and run. So it's kind of where we are in the S&P, sort of in a holding pattern waiting, but we do know that we still have plenty of upside momentum in terms of targets. Now jumping over to the Forex market, looking at the EURUSD first, very range bound today, not really getting a whole lot done in terms of the bigger picture, not really continuing any trend or anything like that. We're just kind of getting stuck. We faded off the highs and now we're fading off the lows, and we're looking just to bounce this back and forth. At the highs, we're looking for selling opportunities above 1.06436, preferably above 64.91, as that would be a breach of the high, and that would get a lot of traders trapped out of the move, which is usually what you're going to find when you get a big run. It's the same thing that happened down here. It looks like it's putting in a bottom, and it comes down, taps all of the buyers that were out, maybe had their stops underneath the low, and then rocket ships all the way back to the other side. Basically, you're just taking this pattern and zooming out. That's what I would really like to see here. Trap above the high and then dump right back down through the lows. So looking to sell above 64.91, and if it does come down to the lows, looking to buy below 58.99 for pretty much the same reason. Now, a couple things that do stand out here. There is a slightly larger area of interest. It may be down here at the overall low. You'd be looking for that trap under there at 57.83. But either way, looking to buy low, looking to sell high, and looking to try to stay out of the middle as much as possible here on the euro. Over on the pound dollar, beautiful day on the pound dollar today. Huge momentum to the upside. This was also part of our market recap today, going over the psychology of the markets, because it was just a phenomenal day at trading. This allowed us to take all kinds of different trades today, and with a nice move towards the upside, this kind of bullishness, although it did come out on news, it's still something you have to keep an eye on. The buyers are obviously defending the original entry point, which is at the close of that candle. Break-even test, a couple attempted tests right there, and now they can't even get all the way down in there. This is an obvious area of support. What I would really like to see now, since we are more in a range, is for the market to take a dip down underneath 24,524. Look for buying opportunities under there for a trap, and then rocket ship the market back up towards the highs. One thing that does stand out is this huge bullish candle. We never really kind of came back, right? We had a little pennant formation there. They broke out and they never pulled back. The pullback was way the heck up here. So that being said, we may get a little bit of a deeper pullback, even just to retest that minor little swing high back at around 2410. But that being said, I mean, you got to keep in mind how strong of the bull side this is. So looking for buying opportunities underneath 24,524 and pushing it back up towards the highs. There are opportunities to potentially sell at the high, but you have to remember this is a very strong bull move. The only selling really that you should be doing at the highs is for profit taking. So that's the pound dollar, looking to buy a pullback there. And then the dollar yen, we actually just pushed into that major area of support. This is where you're looking for possible longs. We're in a very obvious range. We're in a rising area of support, but whenever you have this larger channel formation, larger wedge formation, and you're in a range, most likely it's not going to stick around very long, right? Those levels are kind of null and void once they start breaking down because everybody's looking at the range. We want to be buying low and we want to be looking to sell high. And if we zoom out, we can judge where we should be getting in more aggressively. We should be buying more aggressively. This is a nice, strong, bullish trend. So because of that bullish trend here, we want to be looking to buy low. Right now, the area of interest would be between 110,523 down to 110,468, preferably even underneath 468, like we had this little poke right there. That's where a lot of buyers are going to be jumping in on the move to try to push that market back up towards the highs. Now, this is currently in an area of resistance after a bounce, so expect it to pause here for a little while. People will be taking partial profits, and then up to the next one, same thing, and then up to finalize the move. So that's kind of what we're looking for on the dollar yen here. We may have missed this, but I would like to see, and very commonly do see, the market bounce around that a couple times in the overnight session before it continues that move up. So I don't necessarily think this opportunity is off the table. They're probably come back and retest it a few more times. If they are going to hold it, we shouldn't stay underneath it for very long if it does come back. Outside of that, though, looking to buy low and looking to sell high. So that's going to do it for today. Make sure to be safe going into the Thanksgiving holiday here. This is a time when the markets slow down a lot, and we can definitely see that on the S&P, which is a really good example of that slowdown. So just be careful this week. Make sure to take it easy. Only take the best setups. Make that plan, trade the plan, and you will be just fine. Until next time, we will talk to you all later.